Now, how about the lessor? Lessor, it's really simple. We say, have you met any of those 5 criteria? Was it a specialized asset? Is the title getting transferred? Is there an option for the purchase or the bargain purchase from the lessee's perspective? Is the PV of the amount that is being paid by the lessee to the lessor equal to or greater than 90% of the fair value of the asset right now? And if the asset is going to go to you for more than or equal to 3/4 of the value of that expected tenure of that asset. If any of those criteria are met, the lessor is going to treat it like a sale type lease. We call it a sale. So basically, treat it as if the lessor has sold that property to the lessee right now. So de-recognize the asset from the lessor's books, bring it to the lessee's book. So if you look at the concept, it's so simple. Even though you're calling it a lease, it is actually a sale. So the lessor is just going to de-recognize the asset, book the gain or the loss in his books, and the lessee is going to record that asset in his books. That's it. If none of these criteria are met, then we're going to say, okay, is it that there is a third party who's guaranteeing your minimum lease payment or the residual value of the asset? So if that third party is guaranteed, and if that, you remember the criteria of the PV? So ideally, the lessee is not paying you the figure, but a third party, imagine if there's a financer who is giving you that amount, and if that financer is promising or guaranteeing to give you a residual value, then we say, okay, if you look at the criteria, the lessee is not, that consideration is not flowing from the lessee to the lessor. The consideration is flowing from the third party, and now that PV criteria is actually being met. So if that is the situation, and you know for sure the third party is going to give you the residual value, in that case, I'm going to call it a direct financing lease. Else, I'm going to simply record it like an operating lease in the books of the lessor. I'm repeating, if any of those 5 criteria are met, right, we're going to call it a sale type lease. Record the sale in the lessor's book, record the gain and the loss on the sale, and de-recognize the complete asset from the lessor's book. If, however, the F, the T, the O, and the last S is not met, but the P, which is the present value of the lease rentals that is going to flow from the lessee to the lessor, if that criteria is met only because there is a third party who's guaranteeing a residual value to the lessor, in that case, I'm going to call it a direct financing lease. And if none of this is met, then I'm going to call it an operating lease. Now, in real life, guys, you will see that it's either a sale type lease or an operating lease. This is very, very rare, because it's very rare that the third party will come and give you a guarantee for the residual value. But technically, this provision is given to you. And what we tell you is this. Now, see, this is like an influx situation. Now, can you understand, guys? Can you tell me if it's a direct financing lease for the lessor? How will the lessee classify this lease? Can anybody tell me quickly? It's a direct financing lease for the lessor. How will the lessee classify this lease? Can anybody tell me?
Operating.
Is this clear? Always. Because none of those 5 criteria are met. Ideally, it's not a contract for a rental contract. So the only criteria left is the operating lease. So whenever it is an operating lease for the lessee, now the lessor is not going to record it like a sale. So what is a delta? We say, okay, you de-recognize the asset in the lessor's book, but I will not let you book the gain or the loss. Do you understand what's happening? The transaction is between the lessor and the lessee, right? None of those 5 criteria are met. But the moment I factor in the third party guarantee given by a third party, now that present value criteria is met. So what do we say? We say, okay, still remove the asset from the lessor's book. That means the lessor will no longer give the depreciation to that asset. But I will not let you book the gain or the loss right now in the books. I will defer that gain or the loss. Why? Because it is not the lessee. It is a third party who is guaranteeing. Actually, the questions on this are a little complicated, but the best part is it's outside the scope of your CPA exams. Very rarely will you see these kind of questions being asked end to end to you. So we are going to discuss a very toned down version of this question in the class. The actual questions, if I were to discuss, is a little complicated, but I will just try after we're through with the operating and the finance leases. I will at least try to give you an idea of how this thing works.